First of all, on our panel discussion, we have Peter Jackson here, who is the Managing Director for Arista Ireland. Do you want to go up and take a seat there, Peter? Peter has been with Arista for over 3 years, covering several roles, including Managing Director of Arista Food Solutions Ireland and Business Development Director for Arista Food Solutions Europe. His current role encompasses 3 business units, and he retains some business development responsibilities for Arista Food Solutions in Europe. Before Arista, Peter was 12 years with the Keypack Group. Our second panel member, going up, is John Copestake, who's the Chief Retail and Consumer Goods Analyst at the Economist Intelligence Unit. He writes regular country-by-country surveys on the retail and consumer goods industry, and he's also regularly quoted and interviewed on the sector. But John is also actually editor of the EIU's Worldwide Cost of Living and Livability Surveys, where he ranks 140 cities all around the world as to which are the best and the worst places to live in. And there's also an annual ranking on which cities are the most expensive or the cheapest. I'm sure you've all seen it. One thing I wanted to ask you, John, is with sterling depreciation that we've seen, London is about number 6, isn't it? Just above. Where is it now? Is it going down?
We'll find out in February, but it's going to be a bit lower, I think, quite a bit lower. So,
really? When's your next survey coming out?
The next survey is, we're publishing it in December, but we press release it in sort of February time. So the ranking comes out in February. That's when we rank things.
You can tell us. We're between friends.
Well, it's just, I haven't looked, to be honest, but looking at the estimations that we have, it's going to go down quite a lot. I mean, exchange rate movements is one of the key drivers in the cost of living. So.
Exactly. Okay, and also let's welcome back Ian Wright, Director General of the Food and Drink Federation, and James Walton, who is Chief Economist with IGD. We want to try and open it. We have 2 roving mics. Well, there was one up here, I think, probably, and one there. I don't know if you want to take that one as well. Let me just ask the panel something, first of all, before we go any further. I mean, I'm probably the only outsider in the room who isn't got anything to do with the food industry. Could I ask, let me ask Peter, first of all, which sectors do you think are the most vulnerable to Brexit in the food industry, in the Irish food industry?
From my perspective, I think I would be less concerned about the vulnerability in the medium term. I would agree with what we've heard earlier in terms of tariffs and challenges around that. I personally don't think that's going to be a significant challenge for our industry. What has happened in terms of the way we've developed, particularly primary industries in Ireland, like the beef industry, the dairy industry, their ability to deal with the UK market, their physical presence in the market, I think leaves us quite robust. If we have a challenge, it may be in more consumer prepared foods, and really it will be up to the operators and developers in those businesses to move to a more value-added position. I think the more you operate in a more commoditized area in prepared foods, then you're going to struggle to compete. You have to move up and continuously improve the quality and the value you're offering to the consumer and understanding the consumer. I think the job that has been done, particularly with Bord Bia, with the beef industry, the lamb, on the dairy side, they're very well positioned to cope. And have a long track record of dealing with Brussels, dealing with these kind of situations. Yeah. So I would actually be quite confident of managing my way through that. I think in terms of more value-added stuff, I think unless you're moving much more away from commoditized product and moving up the value chain, I think you will struggle.
See, part of the problem, just listening to our 3 excellent speakers there, is it's like one of these Rubik's Cubes that people used to play with, is that there are so many variable moving parts. John, how do you see this? You're used to looking at strings of variables and moving parts like this when you assess whether it's cities or grocery trade or whatever it is. How do you see it?
Well, I mean, I see as being there's two things at play here. There's one's short term, and then one's the medium and long term. And the medium and long term is obviously far less certain. In the short term, everyone's got to cope with the change in forex, the currency fluctuation, and that's what's really hitting people, mostly primary producers, quite hard, especially those who haven't hedged. So in the short term, people are thinking much more about how much non-value-added foods are going up in price. You know, fresh foods, beef, things like that. But then in the medium term, regulatory divergence between the UK and the EU. Now that could cause even more problems for processed food, food safety regulations, things like that. Those factors coming into play could mean that, you know, if the UK sets itself apart and starts redefining the legal aspects of what constitutes, being legally available food compared to the EU.
But this came up during the referendum, and people were saying, well, you know, we don't need to have all this red tape, and said, well, what kind of red tape? Well, food safety red tape. But is Britain going to radically change food safety regulation compared to?
I think if you look at what, you know, the food safety demands driven by your customers, you know, if you're dealing with top retailers in this country, you're dealing with a Tesco, you're dealing with an M&S, they're not going to take a step back in food safety standards. Yeah. You're dealing with a big QSR, as a lot of the guys out here will be dealing with. Yeah. You know, the standards are only going to increase, you know, and our job is to ensure that we understand what they are and be in advance and meeting that. So I don't think it would be very difficult for the UK to set itself apart in terms of changing its standards versus what's there within the EU, because a lot of them are driven and you know, the big retailers, the big QSOs, the big food consumers, they're not going to want to take a step back, and consumers, more importantly, ain't going to take a step back when it comes to the quality of food they demand, and the safety, the traceability, and then that brings you back to sustainability. And those issues, you know, those big macro issues aren't going away. And I think the point that James made earlier was that stuck with me. Brexit is a very serious issue, and yes, we have to prepare and operate for it, but there's a lot of other big issues out there, and if you think from the outside in, it is one of the main issues. But you know, the technology issue, if we get so focused on Brexit that we miss significant changes in technology, you know, your business could be redundant, but you're able to deal with Brexit like so.
Yeah, okay. I'll come back to you in a minute. Is there any questions from the floor? Anybody got a questions yet? No? So far? Nothing? Don't be shy. We're amongst friends here. Yes, sir, here's the man here. Second row back. Just wait for the, we have a mic there. Get them onto you now.
Thank you. My question to the panel would be, what is your view of the exchange rate in a couple of years' time? Because I would think, my view would be that the 120 quoted by the final speaker seems somewhat optimistic. We're enjoying a bit of a Donald Trump bounce, but that's not going to last too much longer, I wouldn't have thought.
Well, I mean, there is a huge wild card there, isn't it, which is actually the sustainability of the euro structure itself. Now, the euro has seen its own phase of volatility over the course of the last decade, and all of the forces that drove that volatility in terms of, you know, government debt, the security of banks and so on, really none of those stresses have actually been fixed, have they? There's been a lot of talk about reforming the euro, but nothing has actually been done of any substance. And so I would not be surprised to see further volatility in the value of the euro, some of which might actually work to the advantage of sterling. Exactly which way it's going to go, I can't say, but I do think that all of the issues that the European leaders were talking about 2 or 3 years ago, they're going to come back. They've been kicked down the road, but sooner or later we're going to catch up with them again.
Ian, you were talking about the politics of this earlier. I mean, the British government is aware of all these challenges happening sort of offstage, well, away from Westminster. We heard David Davis today. How long is this process going to take? I mean, we know Article 50 has to be done by a certain date, but presumably the transition period is pretty elastic at the moment, isn't it?
Yeah, I mean, I think they will get, the indications we've had are that they will be in a position where they know their negotiating strategy, even if they don't share it, and I quite understand why they would be unwilling to share the detail, but I think they will know their negotiating strategy and the shape of the deal they want pretty much before they trigger Article 50. So I would imagine, and this is one of my concerns, I think some of the decisions on Labour, on the point system, on the sorts in or out of the customs union, I think the thinking is solidifying in the Treasury, in Downing Street, in the Brexit department pretty much now. I think 2 or 3 weeks after the start of the new year it will be in place, and then it will be quite difficult, though not impossible, to change the direction of travel. So I think that's a concern. I would just say about the other question about the currency. I mean, there are a lot of events in Europe which could drive this in all sorts of different directions. So Renzi could well lose the referendum. I think quite likely to lose the referendum, so you get a technocratic Italian government. A fascist gets elected in Austria. I have thought for several months before the Trump thing that Marine Le Pen will win the French election. I've spent some time in France.
You still think that?
I still think that. I don't see why they would vote for the monkey when they can have the organ grinder. I also think that the Dutch election could cause a problem. And once you get you don't need all of those events, and they won't all happen. And I, by the way, I hope Marine Le Pen doesn't win the French election. Although there will be one compensation which is not to be gainsaid, which is that we must have a live camera on Mr. Juncker's face as that happens, because we may well see a man self-immolate for the first time. But those sorts of events, I think, could all drive the currency in several. It's exactly what James was saying. The volatility is actually going to be the problem. It's not necessarily the place where it ends up.
Okay. Does that give anybody here any further cause? Are you more worried now than you were when you came in here about an hour and a half ago? There's a gentleman here. Just wait for the microphone. Can you please say who you are and where you're from?
Alan Bradley from the Culinary Food Group. Do you think the European Union will be in the same format as it is today without Britain in 10 years' time?
John?
Well, absolutely not. I mean, I think that the European Union is going to have to change anyway, regardless of what the UK is doing. In a way, there's a kind of a game theory about it for the UK, which is almost lose-lose in a lot of economic ways, which is the European Union could come out of this as a stronger, tighter union. It could put through the reforms that improve the union, and it could mean that all the things that they need to make changes to keep their citizens happy come through, and then the union itself is stronger. Then the UK loses out by being outside in. But then, obviously, if France votes to leave the EU, and if they vote in Le Pen and have a referendum that votes to leave the EU, if the Netherlands votes to leave the EU, any of these things could really, really upset things there. And that's also quite a negative impact for the UK, but it's also much more negative for the EU. So I think that we'll probably know a lot more by the end of next year. But I think that certainly in 10 years' time, the EU will have to change regardless. But how it changes is going to be dependent almost entirely on the elections that take place in the coming year.
Do you think that attitudes towards Britain are hardening in European capitals at the moment? Since the Brexit vote?
Probably not. I mean, if you look at what James's slides earlier, the groundswell of sort of negative feelings towards the EU across the EU, from Greece, Germany, France, they have a harder stance. The EU
but
is less
amongst
popular.
the governments, amongst.
Oh, you mean amongst governments rather than citizens?
Because
I would imagine
Merkel and.
I think that the opposite's true in that respect as well. I think that a lot of them initially came out and were talking very, very in very hard terms as part of the brinkmanship you'd expect in any of these games. But I think that now that they've had to accept the reality of the vote, then they're obviously coming in softer terms. Don't forget the UK is a huge contributor to the EU coffers, and losing that money would be a significant blow to the EU structure. So whilst they want to talk hard and whilst they want to say these things and come out with this rhetoric, at the end of the day, when they come to the negotiating table, they still will value the UK's contribution to their budget.
Yeah. Anybody else? This is very quiet. Very, very quiet. Let me ask the panel something else. Do Irish companies need to change their approach, James?
I think,
I mean, across food service, manufacturing and retail.
yeah, well, I think what I tried to capture in my speech was a view of a food supply chain that is in flux and which is evolving rapidly right the way across Europe. And the forces that are driving that change are, to some extent, independent of Brexit. So with or without Brexit, I think that we would see, for example, the integration of the real world store into the digital trading network. I think we would see the blurring of boundaries between retail and food service. I think we would certainly
see the cost cutting and
the constant movement towards market maturity and commoditization. So all of those things would command a strategic response from Irish food businesses anyway. And a lot, and when we recognise that really all of the changes which food businesses are putting in place, which means things like more vertical integration of the supply chain, more use of things like robotics, more use of value-adding activities instead of production of commodities. All of those things would be relevant either way. Yeah. All that Brexit has done has actually made those things harder to pull off. So is that actually answered the question?
No, Peter, what do you think? What's Arista doing to...
Yeah. I suppose there's a couple of things that I've seen and observed in the immediate aftermath of Brexit, which was a caution around investment decisions. Yeah. So, and some of the view that you see in terms of the forecast around inflation, around what investment, what Brexit caused was a pause for, and people stopped before, I'm aware of a number of Irish and European businesses that took a pause in terms of their investment. You don't see that in the numbers yet. You don't see that pause in investment coming through. In terms of what it means then for pricing, I don't think you're seeing the full impact yet of the pricing. There's a lot of retailers, a lot of suppliers will have deals that'll wash out, cover in FX. That'll all start to wash out now over the next couple of months, and I think the impact of the pricing will only be seen after Christmas, and that'll then play into your inflation number.
Is it going to lead to further consolidation, do you think?
I think from an Irish perspective, possibly. I think it will, and I think there will be a requirement for people to look up and down the value chain. I think there will be a requirement. The constant bane of our life is the sort of the embedded costs in operating in Ireland, the energy costs, what we call the political and legal cost of operating. We see the need to invest in, the ability to invest in robotics, in automation, constantly looking at ways. You're constantly looking at two things. How do we take cost out and control our cost base, and at the same time, how do we improve the quality of our offer, and how do we move our offer forward and move away from commoditized space? I think those two things don't change, and they don't change regardless of Brexit. I think some of the challenges that we will see from a social impact, from a digital impact, there's going to be a whole cohort, and you start to feel old. There's going to be a whole cohort of people coming into the workplace with a higher disposable income, who've only grown up in the digital age. How they find food, how they understand food, their relationship with it, how they purchase, what drives you to drive them to try. So our original ways of driving trial, which was very important, whether it was through traditional media, all of that is changing and changing very quickly, and you have to be as aware of that as you have to be aware of the other challenges that you will face.
Well, one of the things that struck me on I think it was your graph, James, was the Buy British, the sentiment around the referendum, which said we're going to buy more British food. The red tape is here and the Buy British is here. Does that worry anybody here? Nobody's worried about it.
I wouldn't worry about that.
No?
I think that's the kind of thing you say to pollsters but don't actually act on. There's not a lot of evidence, except in one or two specific cases, that get a lot of coverage, disproportionate coverage, that really is a sentiment. I mean, there have been many goes at that, and it hasn't had a huge amount of traction. I mean, I just to go back to an earlier point, though, I think the biggest danger for Irish companies is this whole issue that John mentioned of regulatory divergence, and it won't happen overnight. I mean, we'll start with the patriation or repatriation bill, repeal bill, whatever it's called, which will allegedly, and let's imagine we take them at their word and they do lift and shift. But the point is that the Brits won't be in those conversations. In fact, they're not in those conversations now in Brussels. So for practical purposes, quite a lot of British influence on regulatory matters has already stopped. And ministers aren't, in some cases, even attending the meetings. So I think the danger is that there is a gentle, incremental, very slow divergence, and then you look back in 2, 3, 4 years' time, and suddenly costs are built in because you've got to have a different SKU set for the UK market and for everywhere else. And at that point, I think if you're a business actually selling into the UK, you begin to ask the question of, well, is this the right place for me to put my investment, or am I better off trying to open up a market that is cheaper for me to access because of those costs? The other thing that I think you guys have got to worry about is, I think part of the trade-off between the open border between North and South Ireland will be an issue about labour. And I could imagine a ghastly situation where the UK government says to the Irish government, okay, we'll leave the border completely open, but we need you to police the entry of labour into the island of Ireland at your borders with the EU much more strongly. So you then have a cost built in and a bureaucracy built in that isn't something really has very little to do with your position, but has a lot to do with the
There was already, I think, that there was talk of the Irish having to police the airports and everything post, when Britain does leave the EU, in terms of passport checks, visas, and everything else. The other thing you brought up in your speech, which hadn't really occurred to me, but was the difficulties you're going to have with labour in Britain. So how are you addressing that now? How are you persuading, you have a lot of contact with government, how are you persuading government ministers, as you were saying, to wear hairnets and not hard hats, and to change the perception of labour so that when you come to a points-based immigration system, you can still get the people you want to employ?
Well, I'm very worried about that. I'm actually an optimist. I know it'd be very difficult to take that from this afternoon so far. But I am an optimist, but I do think there are two problems there. One is there is a perception which has been said to me by ministers in these terms. Look, the British food industry has grown fat on cheap labour, and it's time that you turn that round. Now, the simple truth is that the British shopper has grown accustomed to cheap food, and cheap labour is part of that equation. And it's also true that a number of industries have expanded their production solely as a consequence of the availability of accession country labour in the last 20 years. And it's actually a kind of function of the Bulgarian and Romanian accession that these industries have been able to expand. So now we're going to face a crunch about whether we can replace them. The difficult bit is, okay, so the argument is automate. Some of the argument is automate. Well, that's all very well, and it will increase productivity, but oftentimes the cost of automation is significant. That's why we're absolutely, really, it's crucial that we continue to have access to a highly sophisticated financial services industry so that we are able to finance those sorts of changes. And the irony is that almost every bit of robotics that you can buy anywhere in the market is German. So you're importing that, and interestingly, a big reason that costs are rising right now in the UK is that all the servicing of those robotics that are already here are done by people who come from the mainland of Europe. Ergo, that cost goes up as well. So there's a lack of understanding of the sophistication of these markets that really worries me. That's my biggest concern, and we don't have a lot of time to get across the detail of the real position.
James,
There are really practical things that can be done around the labour question. The first one is obviously hang on to the people we've actually already got, and that, a big part of that is going to be around making sure that the working conditions are competitive versus other industries. Not necessarily just the wages, but the general, the general work experience.
Yeah.
And certainly in my lifetime, I think the experience of working in the UK has transformed in all sorts of different ways in terms of the workplace culture, which is really, really positive. The second thing we need to do is make sure that we're upskilling the people we've got. So as well as keeping them, we've got to make sure they've got the skills that are actually necessary. And obviously, that's one of IGD's functions. We are an educational charity for people who work in the food industry. The third thing we need to do is make sure that as a supply chain, food and drink grabs the very brightest, most motivated, most effective people as they come out of school and as they come out of university. And there is unfortunately a huge amount of ignorance in schools and universities about what working in the food supply chain is actually like. So we have to break down that ignorance and say to people, you can do almost any job you want in the food supply chain. And
but why is it, John, that we hear day after day, British consumers hear day after day about the financial services industry and passporting rights for the city and so on? Nobody talks about the food industry on the 10 o'clock news.
Well, I think this is partly a reflection of what happened in the referendum, isn't it? There's a great Londocentricity about this country, and everyone's very focused on the City of London. Everyone's focused on the financial services sector, and there's almost this is why it was such a surprise to so many people, because there's this bubble, this echo chamber around the southeast, around London, where everyone's focused on the financial services sector. Everyone's focused on all these things. I mean, if you talk to somebody like from far outside London, and you talk about the city, they think you're talking about a city, not the City of London, which is what everyone in London just assumes it is. So there is this disconnect that's happened between, this area of the country and this area of the country where we focus so much on all the, financial services sector, all the money velocity that goes through it. And then beyond that, outside, further afield, there's the manufacturing sectors, there's farming, there's all these things going on that people tend not to focus on. And that's kind of a fault of the media. It's kind of a fault of policymakers in London. You are where you are. People in London have not really listened to what's gone outside London very much, and as a result, no one could call this vote. So.
Peter, we heard about the border earlier on. When you see the options laid out before you about Brexit, soft Brexit, hard Brexit, customs union, what would you like to see in relation to Northern Ireland?
As soft as possible. Any thoughts, like just on a very basic level, like we have sales reps who cover north and south of the border, they're managing across, they're currently today managing 2 currencies, they're managing across, we have operations up there, it's all fed from south of the border. So any option that involves any sort of a border is just going to be a massive hindrance to business. It involves any sort of physical border, any sort of control or restriction to trade. Anything that creates a restriction to trade is going to cost, and it's not good for either north or south of the border. Over our history, the more it has become open, the better it has been for the island. We have to, whatever way we work this, whatever way we lobby, whatever way we work through from a government perspective, there has to be the minimum impact on the border, because it benefits both north and south. There's so much trade. You can't even see the border in some places. You don't know where, if you go from Dundalk to Monaghan, you cross the border about 4 times. So for me, it would have a very detrimental impact.
So when we're putting together this bespoke deal that Paul was talking about, how does the Irish input into the Food and Drink Federation in their lobbying?
Well, you're more than welcome to join. That would be great. No, we've had a very good dialogue, I have to say, with IBEC, and Cormac is here today. I mean, I was actually quite honoured that the Irish Minister of Agriculture was keen to meet me as quickly as possible after the Brexit, so that we could try and compare notes.
Yeah.
We are very, very much, in fact, one of my colleagues is even now meeting with our opposite number from Northern Ireland. And so there is a lot of dialogue going on to make sure that we are we're concretely understanding the position of Irish food companies. Obviously, there's a huge amount of overlap too. A number of your companies are big over in this side of the water. A number of them are owned by, a number of our companies are owned by Irish investors. So there's an enormous amount of input. But to be honest, I've taken the view since the Brexit that I can't be sectarian about this in the sense of worrying who's a member of the FDF and who's not. As far as I'm concerned, it's my responsibility to do as much as I can to protect the UK food industry and and UK and Ireland food industry. And the consequence of that is if you have something to say that you think the Food and Drink Federation should be saying, we will listen and we will do it.
One for all and all for one. We have somebody here who has something to say, right at the very back there.
Birgitta Curtin, Burn Smokehouse. We are situated on the west coast of Ireland. I just have a kind of a general question for the panel. Is there a feeling of optimism in the food industry in the UK of, lower pounds, opportunities of exporting, increased tourism with the pound, the sterling falling? What are the winners? Or anything positive coming out of the Brexit that you have a feeling of?
Well, certainly, I think from a tourism point of view, London at least is profiting from the weaker pound. And if we look at the ONS data on exports, yes, UK food exports are growing in volume terms, and yes, we are seeing some slight benefit in terms of the prices which are being achieved for those exports once you've translated it back into sterling. But I think like pretty much everybody in the country, you get the impression of an industry which is perhaps holding its breath, managing risk, and looking forward to the future. And I am a great advocate of the UK food industry and the Irish food industry as well. I mean, these are industries which are technically very, very capable. There's some great businesses out there with fantastic brands, and they're businesses which are, at the end of the day, essential. I mean, you have to buy food and drink, and that means that we are, to some extent, insulated against risk.
But of course, the big challenge is that they're so tightly aligned and interwoven that it makes it very difficult. Because we've heard about the milk for Bailey's going over and back across the border 5 times before it ends up in the bottle. That's a big challenge, isn't it?
Well, it is a big challenge. I mean, we have historically dealt with shocking events. What makes this one a little bit different, I suppose, is that whereas previously some of those shock events affected specific categories or specific supply chains, this would be across the piece. So it would affect the entire network, and that, I think, is going to be a very difficult management challenge. But we have great companies, very capable management, and very enthusiastic and committed staff. So there's no reason to believe that we won't prevail in the end.
On exports, the trend has been up since before the Brexit, actually. We do a quarterly export survey, and ours showed that they were up 13% in the quarter that was straight after Brexit. Well, you've got to assume that really isn't impacted by the Brexit decision. So we're expecting further growth. I also think that there's something to watch in the numbers, though, when you see these. You really do have to be careful that when they talk about food and drink exports, when some people talk about it, a huge proportion of that is Scotch whisky because of the value. And so actually what you really need to look at is the figures disaggregated without the Scotch figures in there, not least because the one beneficiary, and maybe there's a silver lining here, the one beneficiary of us leaving the customs union and of the post-Brexit situation, the one product category that will undoubtedly benefit is Scotch whisky.
Okay. Hang on one second. We have a couple of questions here. I just want to try and squeeze in before we wrap up.
Hello.
This gentleman
here. Here from Solaris Tea. Just a quick question in regards to if the panel think that Ireland might be adversely affected in terms of the movement of goods to mainland Europe because of the soft border being in place between the North and the Republic. I mean, we import raw materials from Germany, with production in Poland. We sell to a lot of distributors in mainland Europe. Do you think there's going to be a kind of a risk of that being in danger? Because obviously all of our goods travel through the UK to get to Ireland. Do you think there will be kind of costs involved, or a situation where Ireland is cut off by geography from mainland Europe
John?
because of Brexit?
I guess it's too early to tell. I mean, a lot depends on what the negotiated Brexit situation is specifically between the UK and Ireland, because they do have a very much more difficult to extricate from each other relationship. I would imagine not, because I think I would imagine there wouldn't be significant problems, mainly because I can't see the EU wanting to see Ireland isolated and alienated as a result of being a member state. So I would imagine that the EU, if they want to keep goodwill with member states, they will want to encourage that. So they will do whatever they can to ensure it. But you're right, it does have a hugely complicating factor if your supply chain to the EU involves passing through a non-EU country suddenly that used to be part of the EU, and I think that will obviously push up costs and expenses. The net gain of that in the short to medium term is that because you're trading in the same currency, you do have like trade benefits that you don't have with the UK, and especially not now with the UK with the way that Forex is trading. It'd be really interesting to see how the Brexit negotiations work out specifically with regard to Ireland. I think that how you solve that problem, especially that north-south border, and then potentially how that might work for potential secessionists like Scotland. There's obviously a lot of stuff there within our two islands that really needs to be worked out separately from the EU negotiations.
We can't get into talking about Scotland just now. We'd be here all night. The gentleman here.
Yeah, it's Colin Gordon from Food and Drink Ireland. If I were not involved in the food industry, and with the notable exception of Ian's comments, although you did say you're an optimist by nature, Ian, I'm just surprised with how generally optimistic or neutral the tone is. If I were looking at this from outside, I'd go, nothing to see here. And yet there's a sense of, from the economics and from the general structural issues, that this is just something else to deal with. And I think from the food practitioner's side, I think it's much more profound and much more structural in its nature, albeit we actually don't know what it is. And we even talk about Europe, we're not even quite sure who Europe is because of all the electoral changes that are going to take place in the next number of months.
There you go,
but,
Peter,
but
you're too
it's
relaxed.
the observation of just how neutral or how benign the tone is, rather than maybe people rushing to the doors.
Are you benign, Peter?
No, I wouldn't say we're benign. I probably have a more optimistic view on the UK economy. This will be a challenge, if there's further disruption, but I don't see it being a short to medium term challenge, because any change in relation to the EU, any exit mechanism, any transition arrangement is going to be done over a period of time. And, we will be prepared and ready to deal with that as it comes. We've also operated in an environment previously. We've grown businesses prior to, we've grown very significant businesses across Europe prior to, closer integration, prior to the introduction of the euro. We've always found a way to work through that and deal with that. It's very difficult to plan for something that you have no clear understanding of what it's actually going to look like. So you can talk about tariffs, you can talk about structural change, but till you get some sense of what it actually looks like, then you can start to plan your way around it.
It does, it does all seem
but
to come back
there
to
are
that.
other things that can come and affect you and have an impact on you alongside that. And yes, there will be challenges. Yes, there will be structural reform. I think we can work our way through that. And, there is a population growth still in the UK. It still needs to be fed. There's huge investment in capability and in assets that, if they're to be replaced, it's not done overnight.
Yeah.
It takes a serious amount
It's
of time.
going to take time.
And the question goes back to, do we have the talent and capability at our disposal to deal with these challenges? And, the programs that have been run, whether it's the Board B, a fellowship program, those kind of programs, bringing the right people into your business and understanding what that's going to have an impact down the line, they are the things that, we have a track record, we have a capability, we have an understanding. We have an obligation to ensure that we bring people in who can help us deal with these challenges. But, am I going to lose sleep tomorrow whether there's a tariff on or not? No, because I can't say what it's going to be. What we can do is ensure that we lobby effectively. My more concern would be, do we have a capable representation beyond Board B, for example, from a government perspective, because
That's right. The Irish government says, are we Brexit ready?
Yeah.
Final question of the afternoon. Gentleman here? No? Somebody in there? Behind you, sir. Yeah.
Thanks.
Can you just say who you are?
Owen Lowry, the Irish Farmers Journal. With the UK having to import 40% of its food, that means, I suppose, it's very exposed to whatever the other countries decide to do. So, you know, if a tariff is put on exporting countries to the UK, inevitably that means that the price of food in the UK has to increase. So it's the UK consumer would have to end up paying for the tariff. So it becomes a tax and the price of food increases. With that in mind, I suppose, just interested to hear what the panel thinks of how the government could handle that, first of all. But secondly, would that mean that the government could look beyond Europe to do a trade agreement with the likes of a New Zealand or US or South American country?
Okay, 30 seconds each, left to right. James.
Oh gosh, I don't think, if there is a tariff barrier between the UK and EU, I don't necessarily think it's going to be a flat tariff across the board, because if you look at the current structure of tariffs for the EU, you know, it varies line by line by line in ways that don't really seem to make sense. So, for example, if you want to import potatoes to the EU, you might be charged 8%, whereas if you want to import sweet potatoes, 4%. You know, and if you want to import toothpaste, you pay one tariff. If it's toothbrushes and dental floss, it's another. So I think any tariff structure would probably be decided line by line according to what the different negotiating parties can aim to achieve.
Ian.
Well, first of all, just back to Colin's question. This is the biggest peacetime challenge this country has ever faced, ever in its history. So we shouldn't be. I'm not underestimating it. The answer to your question, sir, I think is when the tariff stuff starts, there will be huge amounts of public debate on this. And you know, whenever anybody says, oh, well, we could do a trade deal with Argentina or Brazil, instantly, almost reflexively, the NFU stands up and says, no, we can't, because that means we'll be flooded with cheap whatever it happens to be. So I think the politics of this is very complex. And I think the government's aware of that. But I think they see that as an issue a little bit down the track, and so they're not thinking about it right now.
John?
Yeah, I mean, I think our government's priority is to negotiate an agreement with the EU. I'm not sure they've got the capacity to be going away and negotiating agreements with New Zealand or Argentina or Brazil right now. I think the government is probably going to be markedly focused on negotiating a good deal with the EU in the short to medium term, even into the long term. I think it could take many years. But if you start looking at FTAs with other countries, especially on things like meat, then you're looking at encroaching on all sorts of food safety areas as well. It's going to create a whole regulatory environment that these countries don't necessarily meet, so that's going to cause another series of headaches. So I think at the moment the path of least resistance is literally to try and get our books in order with the EU first.
Peter?
I'd agree. I think their focus will be on the EU, and maybe from a negotiation perspective, it's always nice to talk about your big deals you're going to do elsewhere, but you know, given the amount of time and effort it takes to do one deal, you know, and given all that's involved in the EU deal, I would struggle to see how they would do both.
Everybody was talking about the Canadian deal taking 7 years, and it doesn't include financial services. Okay, that's it. Thank you very much to our contributors today. Peter Jackson from Arista, John Copestake from the Economist Intelligence Unit, Ian Wright from the Food and Drink Federation, James Walton from IGD, and Paul Hollingsworth from Capital Economics. Please give them a big round of applause. Thank you very much.